You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat, smiley face.
Hello and welcome to the China Shop. Step right in, come one, come all. I'm shopkeeper Dan. With me as always is Kyle, creator of financialineptitude.com. How are you doing today, Kyle?
I'm doing good, Dan. How are you doing?
I'm doing fantastic. It's been a really fun week here in the shop.
How many months has that been since anyone's asked you that question? You're always so polite and ask me, but I never actually ask you how you're doing. How are you today, Dan?
Kyle, I'm just doing swimming. Just swimming. That's a word I can use, right? Swimming? Oh, is it swimmingly?
Swimmingly, yeah.
I'm doing swimmingly. There we go. Well, thank you for that politeness, Kyle.
You're welcome.
Folks, come on into the shop with us today. Sit back, relax, rage against the hedge machine. We'd love to welcome any new listeners just joining us. We're here to smash our way into a complete set of fine china, sharing our ever-growing strategies for trying to maximize gains and cut losses. And if you are new to the shop and stock trading in general, you can always check out the Knowledge Center on financialineptitude.com, or you can give our beginning trading episode a listen. We'll put that link in the episode description. But the best place to be really is our Discord server. Kyle and I are on there every day, and it's really just an awesome place to be. And if you join the server right now, send us a private message with your mailing address, and we're going to send you a Smash It Yourself mug straight from the shop.
Smash it yourself. I love that.
We're just so glad you're here. We have a lot of fun. It's always better with friends.
One of the last mug I just sent out, the fellow was very specific in asking for it to not be smashed.
Yeah.
So I'm guessing he wanted to do it himself.
Yeah, that's where the fun is, smashing it up. In fact, we probably should start calling ourselves shop smashers. Or just smashers.
Smashers?
It's good.
Smashing.
Smashers, yeah, because then it's got that double entendre. A lot of exciting stuff coming up here in the China Shop. This week, we're going to put out our bonus interview episode with the lovely Sue Pullen.
Yes.
Famous for her fabulous mortgage skills.
Also, huge supporter of the show, so we're really looking forward to putting that out. We've been sitting on that one for a little bit just because we had such a crazy response for the little sign-up thing that we signed up for to try to get some guests on this show.
So we recorded that a while back while it was still in the middle of winter. So right. There might be some snow talk because nobody's cold and there's no snow anymore. So,
well, you never got snow. We had a lot.
Winter is coming.
You're right.
Winter is here.
Winter's gone.
Winter's gone. Oh, yes. So we've got a delirious, gregarious, glamorous show for you today, folks. Lots of market-moving news, plenty of stocks on the radar, and more options than a kangaroo in a trampoline store.
Okay. Just to prove to you, Dan, how not difficult it is to come up with a funny one, I just used my phone to suggest words. So I typed in more options than, and then just used the suggestions.
Okay.
This is what it spit out. It said, more options than a hotel room for the next 2 days.
Oh, okay. All right. Well, yeah, especially if you're in a big tourist town, lots of motels and hotels. All right. Well, I like mine better, but I also like that telephone autofill.
I just want you to know that you could be replaced by an algorithm.
The moment a robot can take your job, it will.
It's here.
Oh, folks, we're so glad you're here. And just so you know, please reach out to us. We just adore your messages and comments on Twitter, Facebook, TikTok, Discord, or if you're old school, we love emails at 2bulls@financialineptitude.com. Or you can give us a phone call, 725-22-BULLS. Maybe you got a hot stock tip. Maybe you want to tell us about a great trade you just made. Or maybe you just fell in love and you want the world to know. It doesn't matter. We love it when you reach out. And Kyle, we got some good email feedback this week, didn't we?
Yeah, you wanna read some bits out of them?
Yeah, I will turn that over to you. I'd love to hear you read some bits. God
damn it. How'd you know I didn't have it pulled up? I'm at a different computer. I couldn't figure out how to sign into Outlook over here.
I can pull it up, but I also don't have it pulled up.
Oh, goddamn, this fucking show.
Please hold. Oh, wait, that's copyrighted and it's not a parody.
I gotta say, people do not listen to this show for the professionalism.
Yeah, they listen to it for the sweet hold music.
All right. We've got Mark from Texas who reached out to us. Listens to the show Thursday or Friday. He's an OTR truck driver. Dan, I think you used to drive trucks, so you probably know a little bit more about
I did.
the fun of that job.
Oh, yeah. Your butt gets really sore.
I imagine that it's much nicer now that you don't have to listen to AM radio when you're doing those long hauls.
Oh, yeah. Podcasts would have made trucking, when I did it in the mid-2000s, would have made it a lot better.
Oh, I bet. Probably would have had more accidents, though.
Hey, to be fair, I had plenty of accidents without podcasts. Thank you very much.
So Mark reached out. He didn't want to pump us up too much because he knows how egos can go, but he wanted to tell us that we had the best show out there. Seriously, the best show. He says, while it's entertaining, we show an interest to learn and trade while not setting ourselves out to be experts.
Very true. Very true.
He also has a lot of interest in SPACs, so we're going to try to do a little more research on that on our end. He did join our Discord, it looks like, because we've been doing a little bit of SPAC discussion on there. There's a lot of good stuff coming from Mark. We want to thank you for...
Yeah, we love you, Mark.
...for reaching out to us and opening us up to a whole new world of investment opportunities.
Oh, yeah. Yeah, it's been really great interacting with him. And that's just it. Is the more we all interact, the better we all get at this.
All right, we also have Franco from Miami, Florida. He says he's really enjoying the podcast. He's just learning since December how to invest in the market, but listening to us has been helpful in growing his own knowledge. Just want to say thanks and keep up the good work. Well, thank you, Franco. Thank you very much for reaching out to us and just boosting our egos, letting us know that maybe we're onto something here. Both Mark and Franco, you guys' mugs are in the mail. Hopefully you'll be getting those here in the next week or so.
Yes, and if you wouldn't mind taking a picture of yourself with the mug or taking a picture of the mug to let us know if you smashed it or not.
Oh, yes. Definitely want to know that.
And share it with us. I would love a picture of either unsmashed or smashed mug in your hand. It doesn't have to have your face or any revealing info. But I'd love to share that with everybody else in the shop.
We should be sending everybody 2 mugs so that way they can smash one and have one to actually use.
All right, so I'm hearing double the mug budget. All right, you got it.
Yeah, we're going to have to accelerate our sponsorship plans.
We need more mugs.
Tell your friends, folks, so we can buy more mugs so you can smash them.
Oh, good times, good times. Oh, Kyle, you know what that brings us up to?
Time for some news, right?
No, I believe it's time for the bet results.
Oh.
Which I don't know why you're going, oh.
Yeah, wait, I don't have to go first this time, I don't think, right?
No, you don't.
I mean, I'm still behind, but I'm pretty sure. Did I get a better return than you did?
Well, let's find out. Folks, my bet pick was Darling Ingredients. They're consumer staples. They sell booze to other companies to mix it in their booze. It's a very, very gross simplification of their business. Anyway, and more importantly, they opened the week at $74.19 a share. They closed the week at $78.74 a share for a healthy 6% gain, moving my total up to $520.76.
That's not bad. Not bad
at all.
My pick was OCGN, Occidental something. It's a health group. Released some news the week before about a vaccine that they were co-developing with another partner. Caused the stock to go all kinds of crazy volatile, but opened the week at $8.93, closed at $10 on the dot, which was kind of disappointing because it was up to $10.80, and I probably would have been in the lead if I would have just had the ability to sell it. I do not, unfortunately. That took my bet from my total from $430.90 to $482.53 for a healthy 12%.
All right. So you had twice the gain that I did.
Twice the gains, but half the money.
Yeah, right.
Live by volatility, die by volatility.
Right. And then our random stock was FLO.
Opened at $22.96, closed at $23.34, bringing its total up. Looks like $8. $478.85 is now $486.78. So it's beaten me by $4 now, but it's getting closer.
Yeah, you're closing in that gap.
Yeah, still third, but momentum's on my side.
There were some points in the week where it looked like I was just stomping both the random and you.
Yeah.
But that Friday really saved your ass.
Actually, Thursday is when it started, but yeah, Thursday, Friday, really. It was trending like it was going to hit my stop loss, and I was just waiting for it.
Mm-hmm. Yeah, I was down around 8.
Yeah, and then just shot up on Thursday, and then carry that into Friday.
Ah, well, still winning for the month.
For now.
So look out. Stick around, folks. We'll have a new bet at the end of the episode. It'll be exciting, and I have a feeling my pick is going to stomp yours this time.
I still having trouble deciding which way to go, so I've got a whole episode to figure it out, I guess.
And that's where my confidence comes in.
All right, we've also got poll results to go over.
Yeah.
Last week we asked if Kathy Woods was just lucky or if she's still, really knows what she's doing and is going to back that up and recover all the crazy losses that she's seen since the tech correction. This was pretty overwhelming. 72% say that she'll easily recover that, compared to 27 saying that she was just lucky. And I agree with the masses on this one. I looked back a little bit more into her history. She's been putting those 20% gains up since 2014. So,
oh, wow.
Yeah, I'm going to be paying a lot more attention to what she does.
Yeah, and I think she'll come up again when we're talking about a certain IPO in the news, which I think it might be time for.
That was a terrible segue.
All right, well, why don't you give us one?
Just run with it.
Fuck you. My segues are perfect, and I've never done a poor job at anything in my life.
Breaking news, folks.
Breaking?
There's your segue.
All right. All right. Let's throw some music on. Let's get some music going.
Well, we all know why we're listening today. The shop is bursting with the week to replay. So sit back, we got some market affairs. Yeah, some stories for the bulls and the bears. Clowns running companies, laws change overnight. Here we are, it's time for China Shop News. Yeah, now it's time for China Shop News.
All right, Kyle, Mr. Newsman, why don't you start us off with the big stories?
I think the biggest one we got to start with is that stimulus has been passed, signed by Biden. Checks, looks like they're actually starting to go out now. They said they should be showing up in accounts as early as next week, but I think I was seeing some reports that some people might have actually gotten them this weekend already.
Oh, wow. Yeah, I haven't been able to check my bank account, but I'm hoping I'm one of those people.
Yeah, I checked mine yesterday. I didn't see anything yet, so I think you got yours before me last time anyway.
Yeah, I usually do my taxes as soon as I get all the paperwork, and I have the direct deposit and everything set up, and I found I've been in the first round of distributions for every stimulus so far.
Nice.
So I'm hoping that stays true.
I'm holding off on doing my taxes this year because we're not going to be able to claim their kids as dependents. So I wasn't sure how that was going to affect what they hand out.
Yeah.
If they have last year's records, might be a way to get a couple extra payments, but might have to pay it back. I don't know.
Yeah, like your kids aren't depending on you anymore.
Oh, they are. But they filed their own taxes already, so they should be eligible for that. We wanted to make sure they did it, that they got to file them themselves this year, so that way they got the last stimulus can actually be claimed on this year's taxes. If you didn't get it because of something, it was always set to be basically a credit for this year. So by letting them file their own taxes for last year now, they should be getting something for the previous ones too. Well, it's going to fuck up my withholdings, but...
Look at you, looking out for them.
Yeah. And then I'll just turn around and charge them rent.
There you go. I know you can afford it. You got them stimmy checks.
Yeah, I know, right? Can't claim that you can't buy your own goddamn food. No, I'm just kidding. That's got to get cut.
Oh, of course. Of course. I was excited this week to see that there's a new electric pickup announced from a company called Canoo. Their stock ticker is GOEV. GoEV. Easy to remember, right?
Oh, okay.
Made just the announcement that they're going to be selling this truck in 2023 caused their stock to jump 14% yesterday. Tesla was up 4%, and Ford and GM dipped, but like Neo was up 11% itself.
Well, everything that was tech that just got hammered the week before has really been recovering this week. I'm wondering how much of that is either stimulus related or if it was just typical of a correction, but it seemed like it rebounded faster than normal.
I'm wondering if it's a dead cat bounce before we hit some real harsh bear territory for tech.
I don't know. I mean, it bounced right at that correction level. Correction, I think, is defined as 10%. It bounced pretty quick after that.
Okay. Well, I'm a bull, so I expect everything to go up all the time, always.
I mean, if it does tank, then I guess I better get my stop losses reset because I don't want to live through that again.
Well, I did see an article. It was on CNN Business. It was about how the 2020 stock market looks an awful like the 2000 stock market in terms of overinflation, the volatility. What's new are meme stocks, but back then we had .com stocks.
Right.
The sentiment of the news article is that the S&P is currently trading at more than 21 times earnings estimates for the next 12 months.
Right. What's the historical? That's way above the historical, isn't it?
Yes. Yeah. That's above the 5-year average is just under 18 times the earnings estimates, and the 10-year average is 16. In March 2000, we were at 24 times earnings estimates.
Right. So we got a ways to go before we crash.
Yeah. We're only 21 times.
Yeah. Well, the other thing that you really got to factor into that, I don't know if we had quite the same involvement in retail as we have just from the perfect storm of the coronavirus locking everything down.
Yeah. All
sports being canceled. So you got the gamblers, too, that need to find an outlet for that. I know that's kind of helped us.
Oh, sure. Yeah, all that new interest. Okay, yeah, but does that mean that the market's more or less likely to be in a position ready to correct?
I guess it just depends on what happens when everything, goes back to normal. Is everyone going to pull their investments out and cash it in, or is everyone planning on letting it ride and doing this for the long term?
This is a new thing for them, a long-term thing. Yeah, it's a good question. Is that a Twitter poll? When the economy opens back up, are you going to dump the stocks and go back to other things? Or are you going to keep trading stocks?
The question then should be something like, is the surge in retail investors something that's going to sustain as the coronavirus pandemic or things start returning to normal? Like, the people who got interested in the market, are they going to continue being interested, or once life returns to normal, are they going to go back to their other interests and hobbies? Right.
Retail traders who started during the pandemic, will they return? Will they leave retail investing, or is this now part of who they are?
Will they stick around, or are they going to leave? Are they going to leave their cash in their investment accounts, or are they going to pull it out? What's the future hold? We'll make a real question out of that on Twitter and post it in the link to in the description and on the other medias.
Retail investors, are they sticking around when the economy opens back up, or are they pulling out?
Yes, perfect. Like it.
There you go, folks. There's our Twitter polls. What else do you have for news, Kyle?
I've got one of our favorite China stocks, not Neo, but this time Baba and specifically Ant Group. There's a couple of not good stories. Let's see. So the first one is a Wall Street Journal article, and I don't have an account with them, so I can't read the whole thing, but just the headline, the first couple paragraphs, not looking good for Ant. It says that China lays plans to tame Czech giant Alibaba, but the e-commerce company is to face softer treatment than its Ant affiliate, provided it distance itself from founder Jack Ma. So looks like Jack Ma is still in the fucking shithouse. So that was the first one that came out. The second one that came out was the resignation of Simon Hu. That's Ant Group's CEO, and that's following the regulatory crackdown. Yeah, none of these things are looking good for the way that they're going to be treated in the future. Or really want to know what's going to happen with this IPO, if it is still even going to happen, for one. And the other thing I'd really like to know is how much value this has already wiped off from what they were expecting to see on that.
Oh, yeah.
Alibaba's stock has been, I think it dropped a good, $5 or $6 when this story came out. Really happy I swapped those out with Jumia. Even though Jumia took a hit. Jumia has at least come back.
Yeah. What's Alibaba at today?
Closed on Friday at 231.87. So yeah, it's been a rough couple weeks, basically since November. This company's been on a downward trajectory.
Yeah, when we were talking about that IPO, it was up at 300 a share.
It was almost 320 at one point. I mean, this thing was screaming. Not anymore.
Not anymore. Oh, wow. The rise and fall of Baba.
Yeah, a cautionary tale of communism criticism.
Right. When you're trying to do market stuff in China, you need to remember that that government can really tip the scale.
Yeah, no shit.
What else do you have for news, Kyle?
I found a fun little article about the giant footprint that fucking marijuana industry is leaving as far as carbon.
Oh, yeah.
I find that just shocking that growing a plant, somehow industry has turned growing plants into a net negative for the environment. How is that possible?
Oh, what a delicious irony.
How can you have an industry growing plants that is actually producing more carbon?
Then it's cleaning with the plants.
Yeah.
Oh my God. Yeah. That is wild. And I don't doubt it for a second. The energy it takes for an indoor grow room.
Mm-hmm. Oh yeah, that's how the police used to find them before, right? Wasn't it using those heat thermal cameras and searching for hot spots in rooms?
No, it's astounding the amount of electricity, and it's pure greed because the hippies in Northern California who grow outdoors in the forests. You get one huge crop a year.
Right. But
it's all sunlight, it's all natural. You're adding plants to the environment to process that carbon into oxygen. But that's not big industry. That's just a bunch of hippies growing a bunch of weed.
Well, I assume you're looking at the actual emission chart here, and you can see that California is actually the lowest out of all of them.
Yeah, that's funny.
Yeah. So I think you might be onto something there with the hippies. Well, on a more serious note, talking about cannabis, I think we reported last week about Cresco Labs raising $1 billion. We're speculating that maybe there's some mergers coming up. I got another article that came out in U.S. News saying that there's a lot of companies that are doing this, and they're expecting mergers to start increasing for 21 in the cannabis sector. All right, cannabis industry has raised $2 billion in equity capital without conducting any roadshows or receiving funding from banks. So that's saying that should increase the momentum in merger and acquisitions.
Fuck yeah.
The companies raise the money themselves. Now they're fresh with new cash. They can buy companies for cheaper prices rather than doing a share deal. That's even better. I think those share deals are what causes those prices to drop as soon as they announce them. If they're using free cash to buy it, they're not diluting the shareholders' holdings.
They're just purchasing the company outright. Like, here's some cash.
If we start seeing some mergers that are cash secured rather than share secured, we should start seeing those stock prices jump too on the acquisition news. Something to really keep an eye out. This could be an exciting time for cannabis stocks.
And I've got a story about that we'll get to, not in news, but I'll talk about it in stocks with a big merger that happened this week, or was announced this week.
Well, let's move on to that then, because I think it's about time.
All right. Let's cue some music for some stocks.
Here we come, trading on the street. Get the craziest gains from when we're in too deep. Hey, we're just two bulls smashing through a china shop. We're so glad you joined us, and now it's time to talk about stocks.
Yeah. All right. Yeah. So Organigram Holdings, OGI, is a pot company that I've got on my pot stocks watch list. They're up in Canada. They do the indoor grown. They're like the higher end indoor grown cannabis for patients and adult recreational.
Right.
They just announced a new agreement with British American Tobacco.
Right.
They've got a new partnership, and they are sharing into their intellectual property with each other. Like it's 100% share. Like it's not quite a merger, but British American did buy a 20% stake, and I was trying to get shares because I wanted to play the wheel on Organigram. I want to do a monthly wheel because I do monthly options. Mm-hmm. Their shares were at Wednesday when I was looking at it. Their shares were at $2.89 a share, right? Yeah. So 100 shares is only $289. So it's like, okay, yeah, I want to get in this, but to buy the shares, if I'm doing the wheel, I got to sell some puts. That's all in options.
Yeah, that's all options.
But I'll try and keep it stocks. But anyway, I was trying to buy shares. I should have just bought 100 fucking shares, is what I'm saying.
Yeah.
Instead, I was trying to play options because the next day they shot up to $4.04 a share. on the news that British American is buying the 20% stake at $4 a share.
Yeah.
So that was a big, big stock miss for me.
You did a write-up on that too that should be coming out. I think we got to finish editing it for the website. But yeah, I was getting excited reading about that. I like the idea of getting British Tobacco's expertise as far as logistics and shipping and all this stuff that you don't think about when you're running a company or a multi-country operations, which I assume they want to branch out and serve other markets if they're not already doing so. That's
absolutely what one of the things Organigram gets out of it.
Right.
Is they get to expand their international reach and take advantage of the British American Tobacco's warehousing, shipping.
And then the other good thing for British American Tobacco is that they can start diversifying out of nicotine products.
Yes. So looks like a big win on both sides.
Yeah.
And I thought I had the number here. I believe British American Tobacco's shares also rose on the deal.
You have to think they would. That seems like good news all around.
Big news out of that. I tried to trade it. I didn't.
So you didn't really get a whole lot of stock trading done, it sounds like. Sounds like you tried to make some moves, but nothing really happened.
Correct.
I kind of want to talk real quick about GameStop and just the fact that, what the fuck, it's still going.
Still going. It's still GameStop madness.
What's that South Park when Randy fights the guy from fucking... It's when they're all playing baseball and he fights that one guy and the other dad. Yeah, he gets his ass kicked and I didn't hear no bell. Feels like GameStop's kind of like the Rocky of stocks right now.
I didn't hear bell. I'm going to 2,000 a share, and you're not going to stop me.
There was. I shared this the other day. S3 Partners, that's the one that reports on the short interest all the time. They actually put out on Thursday that they should see the short squeeze continuing. That's the first time I've seen anybody say it's not over. I think most of the news articles have always been, get out now while you can, save yourself. The end is coming.
Winter's coming.
Right.
Yeah, so, I haven't seen any articles that were saying like, no, this hedge funds can't stop shorting this stock. It's still going.
That's something. I still got my shares. I'm still holding on for a little bit longer. I'm probably, I don't know if I can keep holding. It's kind of sucking me back in emotionally. I don't know if I want to get back to that point again.
Kyle, I wanted to, I had publicly said I was going to hold some of those shares till I died.
Yeah.
I'll tell you why I sold them, and it wasn't.
You sold them?
Well, obviously,
you bastard.
I sold them. I did, but I'm going to tell you why. Because it had no place in my trading strategy.
Gotcha.
I was holding them for emotional reasons, and like we talked about with Richard Friesen, be going in that master trading mindset. You gotta not be revenge trading.
Right.
I was holding. Yeah. It just I thought about it for a few days, and I thought, you know what? As great as it is for the show for me to have these shares and to keep talking about it, to be an honest trader trying to refine my method, this has no place.
I still think it has value as a long-term holding. I think it probably, if I was trading rationally, would sell them now and just take a little bit of gains and then just put that right back in when it does come back down, because it is going to come back down. I mean, you have to think it's going to. This isn't the next Tesla. But, I mean, if he turns this around the same way he did Chewy, Brian Cohen, specifically, with him getting appointed to that board, this could be a really high value stock. There's a large market. They've got the brand and the infrastructure already in place. This could be really valuable down the line. And if I plan on holding it, the reason why I'm holding it is for long-term potential, not to try to flip.
Do you have any other stock stuff?
Roblex IPO. I want to briefly touch on that.
Yeah, Roblox.
I think it was priced initially at 45 and then started trading immediately in the high 60s, 70s.
I thought its initial the shares began trading at 64.50.
It was priced the day before. That was what they determine a price that they want to open it at, and then as the interest builds, when they're getting set to trade, the price will start climbing at that point. So the first trade was probably in the 60s.
So there was a private financing round in January where people could buy shares, but not us.
I hate that.
They sold those shares at $45.
Oh, okay. All right. That's where they came up with that number?
Right. The New York Stock Exchange set a reference price on Tuesday of 45, but no stock changed hands.
No, yeah, exactly, yeah.
The first stock that changed hands was at $64.50.
That was the same thing that happened to me with Baba. When it first IPO'd, I took the day off of work to watch it and try to buy some. I just kept watching that price target keep rising and rising and rising. Like, God damn it.
Those bastards.
But what was really exciting about this IPO was seeing that Cathie Woods was buying in on the day it debuted. So
yeah, the very day.
The day, yes. If Cathie Woods likes it, I like it.
And I think they closed the week at like $69.50, so there's still time.
Yeah, it came down a little bit from I think the first day was trading in the 72, 73 range, so it came down a little bit. That's what I want to talk about stocks. I did make some trades, one trade in a SPAC that one of our Discord users brought to our attention. It was more for what you call it feeler bets. You buy a little bit just so that way you're paying with more attention to the stock. And
yeah, get your toes in it.
Yeah, it incentivizes you to research it. So I did that. I used my Roth account. It was a ticker TMKRW. I believe these are warrants, but I still don't know enough about SPACs to know. I think warrants can be converted to shares. Is that how that works? Yeah.
Yes, I don't know the process, but I do know that is their intention, and that they are similar to options, as the warrant gives you the right to purchase shares.
Tastemakers acquisition. It's restaurant focused.
I bought some myself.
You did?
I did. I bought some of those, and then I bought some NDACU, which are actually units, not just the warrants.
Okay.
So I bought
what does that mean? What's a unit?
A unit is a package of shares and warrants.
Oh, okay. So you get both.
Yeah. At some point, they will split, and I will get an amount of shares equal to the amount of units I have, and then an amount of warrants equal to whatever their agreement is. Sometimes it's one warrant for every 5 shares. Sometimes it's one warrant for every 3 units. I don't know the specifics of either of these SPACs.
Yeah, I think it's just another thing that we're trying to add to our toolbox. We don't know nearly enough about them yet, but we're planning on learning. So as we learn more about this stuff, we're definitely going to try to share it with you guys.
Yeah, I wanted to have some units in a SPAC, and then this one just opened, so I was like, yeah, I'll grab some units in you.
Why'd you pick it? Did you like the management team, or what it was focused in, or like how'd you actually come across it?
I saw the name was Night Dragon Acquisition Corp, and I was like, Night Dragon, that's fucking cool.
Oh, God. You like that guy who plays fantasy football and picks out players based on their dragon names because it's fantasy.
What, Bruce? It's a tough name. He sounds like he'd be a good halfback.
Oh, God. Normally, when you buy something with your investments, you do a little more research into the group. So...
Wait, what research? No. It's a SPAC. It's a blank check company. What am I going to research?
And you're going to give me shit for holding GameStop.
Hey, okay. I dipped my toes, all right. I didn't go 50% of my portfolio in Night Dragon Acquisition Corp, all right?
I'm only 5% of my portfolio. That's still too much.
I have 2.5% of my portfolio in Night Dragon Acquisition Corp. I think I'm going to be all right.
Yeah. All right. Should we do some earnings? Can I hear my new song again?
Yeah. Let's hear some earnings. Let's get that music going.
My motto's always been, when I'm right, it's right. So I'll wait and watch the charts and the change in price. When the movement's mostly finished at the end of the day, and we know the coming earnings gonna move it my way. Skyrockets in sight. Earnings call delight. Earnings call delight.
All right. On the 15th, we've got DM. I think that's called Des Metals. I think it's a fabrication company. Threw that one down. It I threw it on my watch list as something to kind of pay attention to because I like that Chad Math, the guy who worked with Facebook. And I think this is the company that one of his SPACs or one of the things that he was on the board with acquired. I think it was Chad Math. Yeah, Chamath, not Chad Math. Chamath no, I can't even. I'm not even going to try. Chamath, the guy from Facebook. I threw threw that one on there because I've been wanting to pay attention to this company just to see. I like the investments that he's done. I kind of like the guy himself too. He's very informative, does a lot of podcasting. So yeah, I figured I'll just pay attention to that one, see what it does. On the 16th, we've got Futu, Futu, F-Cell, Guess Jeans, and Kodak. Futu has been all over the goddamn place. That is one crazy stock. It runs between like 150 all the way up to 200, and sometimes in like the space of like 2 days.
Wow.
Yeah, I don't know why. I keep watching it, wanting to buy it when it hits 150, but I just keep thinking the bottom's going to drop out, and I'm afraid to even touch it.
Right. Oh, wow, that's funny.
F-Cell, I was probably realize now why the puts I sold, I got such a high premium for them. I didn't realize they had earnings coming up. Yeah, if you're looking to sell contracts, you should probably know what major events are known that are coming up. So yeah, bet on me there.
Yes.
On the 17th, we've got Sundial, Cintas, and Five Below. On the 18th, we've got Nike, Carnival Cruise Lines. I feel like we were waiting for their earnings for like months and never actually got them. It says they're confirmed on here. Has it been that long since we actually saw their earnings?
I feel like December was about when we saw them.
Was it? Okay. All right. So maybe it has been 3 months. Carnival was the one that we kept getting pushed back and we never actually saw it. The other one I threw on there, the last one on the 18th, is Commercial Metals. It's a steel group that I used to work for. I think their stock price is a little too high. I think it's trading close to $30 a share. Just that company, I don't think has ever been that high, at least not in the time I worked for them. They're definitely not a Nucor. So yeah, I'll be watching them to see if they fall after they report. All right, that's all I got for earnings.
All right, folks, before we move on to options, I'd like to take a moment to tell you that Two Bulls in a China Shop is brought to you by Sue Pullen at Fairway Independent Mortgage, an equal housing lender. Now, Sue Pullen is a certified mortgage advisor. She focuses on finding the right product for you and your needs. She's just so great at it. She's got so much experience, over 20 years. She's just helped thousands of homeowners, they purchasing, refinancing, even reverse mortgages. She can help. She does it all. She's licensed in 25 states and growing. So if you've got any mortgage needs, you couldn't do better than reaching out and seeing what Sue can do for you. Best way to reach her is to just give her a call, 520-977-7904. You can also email her at spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Pullen has an MLS number of 206048. And that email again is spullen@fairwaymc.com. And that phone number is 520-977-7904. Reach out to Sue for all your mortgage needs.
All right, Dan, let's get through the rest of the show. We were going really long.
Yeah, we are. Let's move on to some options.
A little less conversation, a little more options, please. All this volatility just ain't bothering me. A little more puts, a little less small, a little less hooks, a little more calls. Cause they're trading up and up your ears, baby. It's time for options. It's time for options, baby.
All right, Dan, why don't you lead us off?
All right. So I went a little options crazy this week. I'm going to try and keep it short. I'm going to try and condense it down to the main events. After we talked to David Modell on Tuesday, I woke up Wednesday and I was like, I need to play the wheel. Basically, I need to be a seller of calls and puts. I want to be the insurance company. I want to sell other people their insurance on their stock.
Yes.
Right? And if I'm selling a put, I'm insuring somebody against their stock dropping too far. If I'm selling a call, I'm insuring somebody that they don't miss out on the sweet, sweet gains if it shoots up too fast. So I abandoned my straddles and strangles. Bad idea. Should not have done that. That was me being willy-nilly, really messed that up.
Well, you didn't lose anything on that, right? I think you said you broke even on it.
I broke even on my GE. I haven't actually calculated the others because I had some on Ford and then I had one on ExxonMobil.
Oh, okay.
I honestly, I meant to do that before the show. I didn't get to it because I was working on other stuff. I'll put that on the Discord. I'll put those numbers. But I do know that my GE straddle and strangle would have both ended profitably. I bought into my, I only ran the numbers on my straddle. But yeah, I bought in, my straddle cost me 96 cents to buy a put and a call ending on the week. And based on where GE landed, my put ended up being worth $1.37,
Okay.
which is like a 45% profit on
That'd have been nice.
straddle. Right?
Yep.
And I ended up breaking even because I was like, I'm playing the wheel, and backed out too quick. So now I am pursuing both the wheel and straddles and strangles, but now I'm only looking to move into straddles and strangles on companies whose stock have a super high implied volatility.
Super high or super low?
Super high.
For straddles, I think that's the wrong way. I think you want to do it the other way. I think you're trying to buy low volatility, long time frame, and hoping something spikes the volatility. Anything that's going to increase your premium. I don't know that. I don't know. I guess let us know how it works out, right?
I chose high volatility because I started watching those options videos from David Modell. And several of them were mentioning how when a stock has high volatility is the best time to sell or to move in on some straddles and strangles.
Really? See, I like the high volatility for selling the contracts because you get such a higher premium.
Yes, this is true. But the premiums, I'm doing these on weeklies.
Right. Okay. So they should be pretty cheap anyway.
I'm hitting it I'm hitting it as close as possible to the point where I'm getting the intrinsic value, like those GE. Like that GE straddle, it was the intrinsic value of that put when it expired that put it over the top. So I looked at it at okay, this straddle at 96 cents. Is this stock going to be higher or going to move up $1 or down $1 or more in the next week? And I thought yes, and that's where the implied volatility comes in.
Okay.
The higher that implied volatility, the more likely that it's going to move.
Okay, so you got through those. You could have made some money on it, but what'd you end up actually trying your wheel strategy on? So
my portfolio now, compared to what it used to look like, I feel like now it looks like the portfolio of a madman. Because I buy a single share so I can track the price. I've got a bunch that I'm trying to move in on. I want 100 shares of. I've got. I'll just list the stock tickers here. I'm looking at ATOS. I'm looking at EVFM. I'm looking at MARK, and I'm looking at QD. They're like healthcare, financial. I tried to diversify it.
Okay.
A little bit. Couple of them are healthcare. I think one. The QD is a Chinese financial. Anyway, they're all priced around $3. So I can play with a lot of them and not worried about if they all exercise at once. Right. I'm not overwhelming my portfolio. And I'm trying to keep each position a smaller slice of my portfolio. I sold puts on all of those. I bought a single share and then I sold puts. Those are all monthlies, but the monthlies expire next week. So I'm a week out.
Well, if you remember, Modell said that the best time frame he saw, or for him, was what, a month, 45 days out. You get the best value.
Right. So what my intention is to have all of these exercise, get me the shares, and then on next Friday,
then you can start selling the calls.
The Monday after, I can sell those covered calls a month out.
Yep.
That's my goal there.
Okay.
And the other two things I have going on, before we talked to David Modell, on that Monday and that Tuesday, I was like, covered calls are the shit.
I fucking love them.
I bought shares. I just straight bought shares in IDEX, and Sundial. Sundial is that really cheap pot company. They closed Friday at $1.42. And I sold covered calls on them at different dates. Sundial does.
That was a good one because they have earnings coming up. So if you sold one for next week, then you probably get a nice volatility or Vega boost to that price.
Wait, for Sundial or IDEX?
Sundial. Sundial's on the Wednesday next week.
That's what it is. Okay, because I was running numbers like crazy, and I was like, why are the Sundial percentages on selling these options are so much higher?
That's the reason right there.
Good to know. So I had a covered call I sold on MJ, that ETF. And it was definitely going to be exercised on Friday because it was a $23 strike, and MJ was at $23.50 most of the morning. It ended at $24. I waited for a dip in MJ and I bought back the call.
Right.
And then I sold the shares. and the cost of buying back the call, it was about even at 23.50, and I thought, you know what, I bet I can sell these for more than 23.50.
Right.
I sold them at 23.50. So I broke even on the deal because my math was fuzzy. I wasn't fully paying enough attention to it. I should have sold it. I should have set it at like 23.75, and then I would have been okay. But regardless,
in that case, what I like to do is I like to use the trailing stop to sell it. And you can set a trigger. Say once it gets above this price, then I want a 20-cent selling or trailing stop. So once the stock drops 20 cents from that point, then it'll actually execute it.
And that's what I should have done.
Live and learn.
And then the last thing to go over, that Ogi Merger really was funny because the day before they announced it, when the stock was at like 289, I was like, I want to sell covered calls on OGI, but I'm playing the wheel. So since I don't have the shares, I'll sell some puts to get the shares, right?
Yeah.
And I sold my puts, and the next day they had that partnership announcement, and the stock shot right up.
That's great for you. That's free premium then.
So right, I got the free premium, but I didn't get the shares.
But that's okay. You can do it again. That's the whole point.
Yes, I can, and I will. OGI is definitely going on my monthly list, but I'm waiting till Monday to sell more puts.
All right, my turn.
Yep.
All right, I made a few moves and options this week. Kind of doing the same thing with you did. I was really liking the idea of the wheel, so I sold a March 26, 1750 puts on FCell. Managed to get $3 a contract, and I was loving that. Man, if I'd known that they had earnings coming out, though, maybe I wouldn't have been so keen to the jumping on that.
Right.
But that would put my purchase price at basically $14.50 if they get put to me, right? So if I get assigned it and have to buy those shares, my total obligation is still only a couple dollars over what the low was during this tech sell-off. So I'm pretty sure with as volatile as this stock is that I'll be able to sell calls no problem and still make up that difference if the earnings come out negative and this thing drops. Actually kind of hoping that they do get exercised because I kind of want to own some of that. The other one that I traded in, I doubled my position in OCGN. I got the same cost basis as last week when I got a $7.50 net. So basically my total cost to purchase the shares was $7.50 after selling the call for those shares that were basically at the same price that I paid last week at $7.50 a share total net debit. But this time I had to sell April 16th, 12.50 calls. Still got to do the 12.50, which I like. So that means the max potential profit on that is $5 a share. And then with that bottom price of $7.50, we've seen after last week, it'll dip below 7 occasionally, but it seems to shoot right back up. The last one I did is paid off so much faster than I thought it would, but because it's a bull call spread, and this is the reason why I don't really like them, it's so much harder to actually get out of them.
To exit the position.
Yes, because the options themselves are not just intrinsic value. They've got time value and everything else. So the trade was June 18. I bought $28 calls at $6.75, and I sold June 18 $37 calls for $4.25. So that allowed me to get $28 calls at a total cost of $2.50 per contract. That was when the stock was trading at 28, and the share price just this week is already up around $34. My break-even point for this thing is at $30.50.
Oh wow!
Yeah, and I was really liking the spread I was able to get for that price. I picked the June 18th because I wanted to make sure that I had the next test flight period in that range that I was getting. That's supposed to happen in March, so I wanted to make sure I had that covered because I have a feeling that once that actually happens, the share price is going to react positively to it, assuming it happens. But if this share price does keep rising, the deeper in the money these calls end up going, the more they should reflect the actual value and less of the speculation value. So I might be able to unwind from them sooner. I may not get my full $6.
Oh, you might not get maximum profit. Oh no.
I know. Yeah, with 9 minus 250 is $6.50 a contract. This is the max profit.
Yeah.
So yeah, if I can get 5 out of it, I might just do that, take it, and then do it again.
Yeah, that sounds great.
Yeah. So, yeah, that one worked out great for me. I think if you're going to be trading options, I think you really have to do a spread because you need to lower that price that you're paying for those contracts. And the reason for that, we talked last week about going through that alert data that we talk about at the end of this segment. I went back through mid-January, and I found the hit rate on purchased options is horrendous.
Really bad.
Only a few of them
Really,
actually
really
have
bad.
expired, but right now they're losing twice as often, and the loss is 3 times what the profits are on the ones that do actually make it.
Yeah.
So even though only a couple of them have actually expired, most of them are already down significantly, if not completely worthless. Yeah, even though I know that, I still couldn't resist making that space trade. Now, I still think there's value in reporting these big money options alerts, but I'm probably not going to look at just big money. I think I want to mix in some other smaller ones that look appealing to me, just so that way we can track them going forward. And also, I think with those big money ones, I think maybe the focus needs to be not on buying them and mimicking it, but selling them.
Yeah, I was going to say, I want to mimic it, but I want to be the one selling the options now.
Right.
Like,
Well, they're more than likely, with that kind of money going on them, they're probably institutional hedges. And if the institutions are betting that the stock price is going to, if they're hedging their position, that means that that's just their backup plan. What they really think is going to happen is the other way, right? So yeah, it would make more sense with what the data is showing. You want to be a seller of these things.
Yep. You want to be the insurance company.
Yeah. So with that, you want to go over the couple that I picked out?
Yeah, let's hear them.
I've got TMUS, TMUS, March 19, $125 calls at $5.80. There's $870,000 trade that happened. YY ticker, April 16, $160 call at $3.80 a contract, almost $1 million, just shy. And then 2 smaller dollar ones that I kind of liked was the Oracle 319, $67 call. That one was trading at $6.75. That's ridiculously high. I think this must have been bought before the actual earnings came out. So you probably get a really good price on that, but I wouldn't be surprised to see that climb a little bit higher now that the actual earnings have been reported, because they were decent. That was only $28,000 total price on that trade. And then Jumia, $319, $60 calls, 80 cents, $41,000 share value in the trade. Super cheap, but man, $60 is a lot for that thing to go up. It's got to go up $10 in a week. If we've seen a stock that can do it, Jumia is the one, but I threw this one on here because I wanted to see I wanted to track it, see what it did.
What was how much money did they spend on the Jumia calls?
41,000.
Okay, that does feel like a long shot.
I wonder if that was somebody selling a bunch of those on some call or positions they already owned, just trying to make a little bit of extra money.
Somebody sold them short, and they're like, "I want to hedge against this short sell." So
no, I think somebody maybe just owns a large position of Jumia, and they're like, no, I'll just start selling weeklies on it.
Oh, like it's somebody selling their covered calls?
Yes.
There you go. All right, well, so who's buying them? Anyway,
right?
It doesn't matter.
I mean, that seems like some pretty high premium for something that's $10 out the money that expires in a week.
Yeah. 20% in a week is a really big run.
Yeah.
You know, that brings us right up to...
All right, Dan, what's your good?
Definitely the timing of my OGI puts. Selling puts, selling, they were $2.50 puts, and the next day, the stock just jumping up $1 a share. And when it's that low, it's like it jumped 35% the next day.
What's great about selling the puts too is even though you don't have the shares and you're missing out on the gains, per se, because you just sold a put. I mean, you just got free premium, man. That's awesome. That's got to feel good.
That's why it's my good. Why it's my good. I literally just got handed free money on Tuesday.
Exactly.
Yeah, or Wednesday. Yeah, it was Wednesday because Thursday's when it happened. Yeah. That felt pretty good. So I like being the insurance salesman, the insurance company,
right?
more than I like being the one who needs the insurance.
My good is that lately, I think since we started doing these guest interviews, I think been taken away a lot from them. I feel like my trading has gotten a lot less emotional, a lot more technical.
Yes.
As fun as those emotional roller coasters can be, I think making money is actually a lot more fun.
Yeah.
I still got a little more work to do. I still got a lot of work to do, but it's trending in the right direction, and it makes me feel good about what I'm doing.
Hell yeah.
What was your bad?
Definitely the math I did in my head on my MJ covered calls. I put it all together and I was like, well, yep, this is the right move. And I pushed and I moved on it. And then like after it had all settled, I sat down and like actually wrote it all out and was like, oh, okay, that wasn't, I did not make the right moves I thought I was making. Whoops.
So what's the lesson there? You're going to actually write down the math when you do it rather than try to just do it in your head?
That's just crazy talk. That's just crazy talk. Always in my head all the time. Yeah, no, that's exactly it. I have to write them down so I can see it and check it, and then I know. Yeah. That's my lesson there.
Acknowledging the bads only works if we actually learn a lesson from them.
That's very true. Very true. Very true.
I feel like I've made this mistake before, not noticing F-Cell had earnings coming up before I started selling puts on them.
Oh, yeah.
God, I know the worst part is I didn't notice it until I was doing the prep for the show and looking at what options or earnings were coming up. That was the first time I'd even looked at it. Wow. Man. If there's a reason why premiums are high sometimes, so maybe I need to do a little bit more research and figure out why.
Yeah. Well, you're making me feel a lot better about my sundial covered calls.
Right.
They got earnings, and as I know, earnings. I think earnings is going to drive a price down more often than it'll drive it up.
I think you're right
after
too.
The earnings.
I think options typically price. I mean, obviously they have to, right? Because that's just the way it works. The person selling the options takes on more risk, so they get higher premium. So, what is it? 80% of the time, roughly, they're not going to move as much as the options are priced in. So it's a bad because I didn't do the right research, but I think it's working out for as far as being the type of trade I want to try to make, right?
Yes.
The method was bad. The results might end up being good. The results are what I want to do, but I didn't do the homework properly. I just lucked into it, and luck is not good.
Yeah, that's not the way to. You can't do luck long term.
No, not at all. But you're ugly.
Oh, definitely backing out of my straddles and strangles without letting them finish. I just left money on the table with GE. I had a straddle and a strangle, and just fucking, I'm on to this new shiny object now, and not seeing that trade, and like all I had to do was wait 3 fucking days.
Right.
And I didn't have the patience to do that, and that's me being impulsive and lacking patience, and that's very ugly.
Yeah.
And I really need to get on top of that.
Fair enough. My ugly is getting sucked back into the GameStop emotional roller coaster again.
Yeah.
Just when
I've been really zen about it.
Just when I thought I was out, they sucked me right back in again.
Diamond hands to the moon.
Yeah, I probably need to do something to kind of take, or at least mitigate it. I do want to keep a little piece of it, but I don't think I need to keep as big a piece.
Yeah. Yep.
Ooh, man. Okay,
well,
that's a lot.
That brings us up to the new bet.
Ooh.
Stocks. They're the center of a universe. That's for every one of us. Consequence for one of us. Make our picks with no regret. Every open, every close, every spread. It's the my bet.
All right, Kyle, I get to go first. This is so weird. This feels so strange.
I'm glad that's the case because I'm still trying to figure out what I'm going to bet.
Oh, wow. Okay, so my confidence in I'm not going to go first again next week because you don't even know what you're going to bet. No, that obviously you could bet whatever. Well, I had yesterday when I was thinking about it, I was looking and I was like, man, this my Friday pick'em yellow. It's a road railway corp. Mm-hmm. They hit 4 days of consecutive new highs, and I was really digging on them. But today, when I was looking over everything, I came up with a different one. I'm not going to do that one.
Oh, okay. Curveball. So you don't know what you're doing.
I do know what I'm doing.
Okay.
I'm doing Boeing, BA, Boeing Company.
Really?
Yes, sir.
All right. Any particular reason why?
They hit a new 52-week high on Friday, and I mean, they haven't had any big news since March 2nd. I'm looking on Ameritrade. I'm not seeing it. They did just have a big order come through and be announced of some planes. I just think moving forward, they're big large cap airplane provider, and I think as the economy opens up, is opening up, airlines are getting bigger. They're clearly striking new deals for planes now.
Right.
I think that Boeing's gotten out of the woods with their all their plane problems.
You mean the ones that the engines keep falling off on?
Yeah.
I don't know that they necessarily gotten out of the woods of that yet. I think the whole fleet is grounded on whatever model that was.
I think that one thing was just maintenance.
The two, you mean?
The two things. All right, mistakes were made. No, I think they've got some really good momentum, and I don't think that momentum is done. Their own balance volume is higher. The price is going up. They had a MACD cross a couple days ago. Yeah, I'm thinking Boeing.
Okay.
BA.
I think I've come to a decision here. I was looking at FCell. I don't know that I want to gamble on earnings. I really like that company. But I think what I'm going to go with, because I think I've picked them before. I'm going to try and pick a new one this time. I'm going to go with PLTR, Palantir. I keep seeing a lot of news about different agreements that they're signing. It just seems like there's a lot of positive stuff coming out about them right now. They've had some positive momentum the last week after hitting that bottom.
A great week.
Yeah. So, I think I want to ride them for a little bit. See how they do me.
Mm-hmm. Yeah, well, the Palantir, that word comes from Lord of the Rings,
No, I didn't know that. What does it mean? That's
the Palantir is the orb that they use to communicate, and Pippin looks into it and sees Sauron. And at one point, Aragorn lifts it up and reveals himself. Yeah. And not to get too nerdy, but Boromir's father there in Gondor had his heart corrupted through the Palantir.
Right.
Denethor was his name. Anyway, sorry, what's our random stock? Lord of the Rings.
I'm trying to load it right now. For some reason, it's not.
I swear to God, if it loads up Sauron as our random stock, I'm going to lose my shit.
God damn it. Hang on. All right.
Yeah, Sauron Energy Systems. Okay, well, I have done a search on Ameritrade. Apparently, there are no companies that use Sauron in their name. So, okay, there's a GitHub random stock picker.
What did it come up with?
NIU. It is NIU Technologies. They are consumer discretionary automobiles based out of China.
NIU.
They trade on the NASDAQ.
Okay, that's a real stock. 1.5 million average volume.
Ameritrade. Okay, this is the very first stock I've seen on Ameritrade that is rated at a full 10 outperform.
Ah, fuck. Okay, well, we also need our quote, so let me see if I can find a good quote.
I actually think we're in a good spot here because they had started the week around 32 and they ended it at 41.64, so maybe they're done with their huge run?
I wouldn't count on that. I think consumer discretionaries are seeing a lot of positive momentum because of the stimulus check.
Oh, God. Okay, so we're about to get our asses kicked by NIU. Well, there's a good pick for you, folks.
Damn it.
NIU. Oh, man. All right, folks, so there's our bet picks. Stay tuned next week, and we'll find out who won. And remember, if you like our show, let us know by rating and subscribing on your platform of choice. If you like our show and hate social media, just tell all your friends. And if you don't got friends, that's okay. You can buy our new book, How to Win Friends by Buying Them, written right here in the China shop.
I think that might be false advertising.
Oh, yeah, I didn't write the book, damn it. But I'm going to write the book.
Maybe.
It's a big shop. There's room for everybody. It's more fun the more we're here. We're so glad that you're here from all over the world. Oh, I just love you all so much, and thanks for joining us. And until next week, happy trades.
Bye, folks.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.